Hey everybody, welcome to the morning market briefing, December 13th, 2022. We got CPI coming in. I don't want to say hot because I haven't seen the data, but coming in right now. Before we start, Dow futures up 69 basis points, S&P up 70, NASDAQ up 74. I would imagine that we might see some fluctuations in those numbers by the end of the call, depending on how the CPI data comes through. On CPI, just to kind of set the table for what we are looking at. The headline expectation is 7.3% year over year. Ben just gave Tom a very ominous and confused look. So the headline number 7.3, the last reading was 7.7. Where'd we come in, guys?
I was just looking at the market. It looks like it's up. Anyway, I'll get
So
I think it's up 3%.
Yeah, it is.
Oh man.
So CPI year over year came in at 7.1%. So we actually came in under.
Did anybody predict that?
I was thinking we were going to go over the small business optimism report came out very hot this morning with a lot of indication that suddenly people are feeling very excited. And when people felt excited this year, CPI has gone up. So for context, the month over month number, which historically speaking, but not so much recently, has been the number to look at. The expectation was for CPI to rise 0.3% month over month, coming down from 0.4. It actually came in at only 0.1. And not only that, but core, which was supposed to come in at 6.1, came in at 6.0 on the dot. So we're starting to see the headline and the core converge pretty quickly here over the last couple of months, particularly as the overall headline comes down. And core is actually coming down just a little bit, but staying right around that 6% level. Right before we went live, we saw a big jump in bonds. And I think that was the giveaway. Somebody had the number because as soon as that number came out, we saw the 10-year drop by about 15 basis points just on that news. So here we go. Thoughts, boys. What do we think?
Yeah, the 10-year fell like a rock.
Just went directly down.
Yeah.
I mean, that's a very significant move, even in 2022 when the 10-year fluctuates quite a bit.
I mean, earlier this morning, the 10-year was at
close to 360.
Yeah, it was like 361.
Yeah.
And it fell basically straight down to 3.5.
Yeah, we're at 345 now. So we're continuing to see strength there. I mean, across the board, everything is green in bond land, except for some reason, the 316.23 T-bill.
So there's some very interesting data points here. Just going through some of the details, transportation was actually down relatively significantly on the month over month read, and is only up 14% now for the year over year. Medical care services, they say fell 0.7 on a month over month seasonally adjusted, which obviously is not like 9% on a year over year basis annualized. I don't know if medical services down 9% on a year over year. I think there's some interesting things happening there. On a month over month basis, used cars and trucks down 2.9%. So some of these numbers just seem very aggressive to the downside, which, I mean, I don't know. It may very well be true, but I mean, you're talking about owner's equivalent rent decelerating just a little bit, shelter decelerating a little bit. But yeah, the medical care services really driven down by physician care services, and then also insurance. Airline fares down 3% on a month over month. So there's some movements in here that belie a little bit of what at least I'm seeing on the ground. So whenever you look at the CPI report, there are assumptions built in to it that I think can move things weirdly based on the calendar or how things are calculated. And the same is true on the insurance piece. And people have been keying on that for some time now. I'm surprised to see such a significant decline on the insurance side. I'm trying to find the actual number there. Yeah, in health insurance down 4.3% month over month. So that's down 50% on a year over year, which there's no way that's the case. And so you back that out, and that's just very aggressive. And I don't think that is indicative of what's actually going on. Certainly, if you look at United Health, they're talking about low to mid-teens in rate increases. So, inflation is there. Inflation is still an issue. The reported numbers are coming down, but I would be hesitant to draw tons of conclusions from this. However, I would say, why do we care about inflation? It's because we care about the cost of capital and what the Fed's going to do. And the fact of the matter is the Fed's not looking at the health insurance thing. They're looking at the trend, and inflation is coming down. They have some confirmation bias on that. They're going to say that they were right. They're going to do 50 basis points. And I think that work's going to come down. And I think that they maybe get to 5% next year, at least right now. And I would expect that number for next year is going to come down fairly significantly. I think we go down to 25 basis points assumption in February for that rate hike. And then maybe we have one more 25 basis point hike after that. I think that's what the market will price in beginning now.
Yeah. Yeah. I mean, the trend is, I think, the big thing to pay attention to. I mean, the nuance of it is interesting and almost makes you, to some extent, question the overall data in some ways. And I don't say that to be conspiratorial. What's that word? Conspiratorial. But I mean, the Fed is going to say, look, we've been raising rates, and CPI slowed to 7.1% from 7.7%. That's a nice move, a meaningful move. Core CPI fell from 6.3 to 6. Simultaneously, we got data in that says inflation adjusted hourly wages were up 0.5% for the month of November. Which, you kind of wonder how much that potentially works against them. We are seeing decent movement on futures now. I'm getting everything on a real lag here, but I'm seeing NASDAQ futures.
And we might
1.5.
I think we might be up 5% today.
Wow.
So this is actually interesting.
I'm seeing us up too. Yeah.
Not to poo-poo your point here, Ben, but what's interesting is the expectation for rate hikes has actually increased since the numbers came out. So when we got in here this morning, the rate hike expectation for tomorrow was 2.08. It is now 2.11. So increased by 3%. And then the expectation for the 1st of February rate hike is actually now at 3.66. So that would basically say we're looking at 4 rate hikes in the next 2 meetings. And then from there, it looks like we're doing 1, maybe 2, with a peak out in June.
I would say come back tomorrow and let's see what.
Yeah, I just think it's interesting because the
I wonder,
numbers did update in real time, but they went up and not down, which I thought was very surprising.
I mean, I've said this before, I think on the call. I know I've said it in investment committee meetings, and I don't mean to imply that this is right, but I mean, I feel like the Fed's pattern is that when something works, they do it for too long. I wonder if there's a degree to which they're saying, hey, these aggressive rate hikes are working, so they're going to keep doing them, not they're going to let off.
Well, there was an interesting Wall Street Journal article that came out this morning talking about the Royal Bank of New Zealand. They raised 75 basis points last week, and they wanted to raise 1%. And basically, when they asked, I believe his name is Daniel Orr, he's the basically their version of the Fed chair, are you intentionally trying to start a recession with these huge rate hikes? And his response was, yes, that is correct. I'm trying to start a recession. And so it's possible that he might be the only honest person in the room. And perhaps Jay Powell is also on the same track in the sense that he is trying to intentionally start a recession. And so if that's the case, then I would say, yeah, he's probably going to continue raising rates.
So I mean, you heard our view just now. JP Morgan's trading desk actually came out with what they thought was the likely scenarios yesterday. They said there was a 20% chance of getting 7.2% or lower. And they said there's a 15% chance of being within that 7 to 7.2 range. And if that was the case, we came in again at 7.1, they expected the S&P 500 reaction to be up 4 to 5%. So
it's going to be an interesting day, but
a lot of confirmation bias out there. I would say, we want to maintain our discipline.
Yeah.
Today is definitely a day to be looking for opportunities to trim risk, I would say, because I still think the upside risk is there, but maybe it's fading. Maybe inflation really is coming down, but I'm still sort of in the camp that it's a little stickier than they think.
Yeah, I think it's a day certainly to trim risk. I think it's going to be interesting to see if other market participants are doing the same to see what actually sells off. Because I think, you're still very much in the window of harvesting losses. Are there some opportunities to say, okay, well, we can get a little bit more for this than we did yesterday, but I'm interested to see if there's a little nuance.
I mean, I think it does extend this window trade that we talked about in November, and I think this extends now into mid to late January in terms of a potential squeeze. But I think it's important to remember what happened at the beginning of last year when we squeezed into the end of the year. And
I mean, NASDAQ futures up 4.5 now. It's wild.
Yeah, so we just got another big interest rate futures update. So now we're looking at a total of 4 rate hikes, period. And it's stepped down again, but to this meeting, 3.4 the next. And so the assumption is sometime between now and March, we're going to peak out. There's a potential for perhaps a 5th rate hike in June or May based on this futures curve, but I mean, it's come down quite a bit. So it's interesting that it first went up and then it came down right after that news.
I would say if you're in the mortgage business, or if you're looking to purchase a house, I think you have a potential window here over the next month where you might get more favorable rates, which is positive.
I mean, we are seeing, so the 10-year starting to move back up again, which is interesting. We're almost up back over 350. So a little bit of a shake off, but I think it's just people are trading like crazy right now, trying to figure out what they want to do.
I am. Not really. Global fund manager survey. Investors are bearish on growth. They're bullish on the China reopening. The Bank of America bull bear indicator at 2.6. 69% of managers expecting weaker global growth. Pessimism is stable because of China. That's a little bit of an offset there. Ben, anything?
Yeah, people excited about the China reopening. What really stands out to me in this report is how underweight equities fund managers are still. I know the bull bear indicator hasn't crept up a bit. They also there's a huge consensus among fund managers that inflation has peaked and is coming down, and rates have peaked and they're coming down. And that's why I say, confirmation bias is a real thing. And I think that we could have this self-fulfilling prophecy right now of market's going to go up, inflation's coming down, rates are going down. We got to get in, and we got to make sure that we're fully allocated to equities by year end. Otherwise, our clients are not going to be happy. And I think that's going to happen throughout the fund universe. And I think we could have a little bit of a melt up here. So we'll see what happens. But I think it just, again, reiterates the importance of being disciplined, buying on weakness and selling to strength.
Yeah, let's not forget though that Jay Powell talks this week, and he has a real knack for being a wet blanket. So there's a possibility he could come back and very strongly push against the expectations the market has come up with itself this morning.
We did get small business optimism survey. Optimism rose a little bit, and you kind of touched on that earlier. But most readings still pretty consistent with a recession overall. I mean, there's a lot to unpack here. I mean, the big story obviously today is CPI, but some interesting quotes going into holiday season. Small business owners are seeing a slight ease in inflation pressures, which perhaps we're seeing that a bit in the data, but prices still remain high. I mean, that's the crazy thing lost in all of this is you see this relatively big month over month drop in annual CPI, but we're still so high.
Yeah. And the same thing is, and we talked about this, look at, they're seeing a slight easing in inflationary pressures, but yet more small business owners are raising prices than they have in the last 6 months. So essentially what that means is, yes, maybe the supply chain is easing for some of these small business owners, but they're getting more aggressive now and saying, okay, I made it through that. Now's my time to make some money. I just paid all my suppliers. Now it's my turn.
We did get some company news specifics from Oracle. Pretty nice quarter. Stock's up about 5%. Pretty solid move there. Some of that helped out obviously by what we're seeing on the CPI stuff, but what do we see from Oracle?
Yeah, you saw a little bit of deceleration in some of their organic growth efforts. Their hardware business continues to just be a cash cow for them, but a cash cow that's a little bit dying. If you divide it into quadrants of high growth, high cash, it would be low growth, high cash, or even decline. So they're just milking that while they can, trying to transition to this cloud business. right now, I think the job market helps them with all the layoffs happening in the tech sector, because Oracle is notoriously difficult to work for because they have such a culture of selling and selling and selling. And really, there is no option other than your quota. And so it's a little bit of a tough environment for some of these salespeople, but in periods where the job market gets tighter, people like to go to Oracle, and I think that will help them going forward. But it remains a company that I think has inferior technology relative to some others, and therefore we're not really interested in it that much.
Thoma Bravo is acquiring Coupa. Coupa works in business spend management, really tries to digitally transform the office of the CFO. Huge premium here on this deal. I mean, this is a stock that was pretty hot for a while, along with a bunch of other SaaS companies, in 2020, 2021. But they're acquiring this company at $81 a share, which is a 77% premium. Very, very robust. Ben, what's their angle here? Do you think they're overpaying?
I think they're overpaying. It seems a little bit early. I mean, the tendency when you see a really well-versed private equity company like Thoma Bravo make an acquisition like that is to give them the benefit of the doubt. But the number of visionary tech private equity companies that we've seen end up blowing up, I mean, SoftBank is one that clearly jumps to mind. I mean, I wouldn't make this deal. I mean, I wish them all the best of luck, but it's a crowded space, tech world, and to acquire a company that isn't really generating a ton of money in this environment, it seems it would be a bridge too far for me. I can tell you that.
FTX continues to kind of remain front page news. The SEC says Sam Bankman-Fried defrauded investors of $1.8 billion, built a house of cards. Quote, we allege that SBF built a house of cards on a foundation of deception while telling investors that it was one of the safest buildings in crypto. That's from SEC Chair Gary Gensler. Meanwhile, he was arrested in the Bahamas, facing criminal charges in the U.S. They have detained him. Not surprising. I don't think that he's actually being arrested.
I think the SEC is so complicit in this, and now they're just turning around and doing CYA and saying it's not our fault, it's your fault, and they're having SBF take the fall for it. But what I would also say is, how low can it get for Sam Bankman-Fried? I mean, he spent hundreds of millions of dollars in essentially gifts to the Bahamian government, probably preparing for an eventuality to have some protection if the US government came after him. And the Bahamian government's arrested him and is now throwing him under the bus too. So
I mean, granted, he
what
gave
a bad
hundreds of millions of
investment.
dollars to the U.S. government as well.
That's true.
In order to not get pinched. And now I think everyone knows that, and that's why everyone's turning on him.
They're like,
they don't want to, their corruption got found out as well.
But guess who's not going to return the money?
Yeah, exactly. Maxine Waters, go.
Yeah, it's having an impact on the other exchanges as well. I saw a story yesterday. Binance, they've had massive outflows, close to $4 billion in the last week, $2 billion in the last 24 hours. The big story yesterday was they actually used the same auditor as FTX, which tough day to be that auditor, I would imagine.
Oops.
Yeah. It's just the Wild West when you think of the crypto space. I guess Bitcoin has stabilized to an extent over the last couple months, but I mean, it's down so much. I mean, we think about the challenge in equity markets and fixed income. It's kind of nice to not have crypto exposure this year.
Yeah, and that's the Bitcoin that hopefully you still have access to your Bitcoin.
Right.
I mean, if it's at FTX, I mean, who knows?
Good luck. Yeah. There you go. That's our view on crypto. Good luck. We'll wrap it up there. We'll continue to update tomorrow. Big day tomorrow, Tom. How you feeling?
Man, I feel like this is a little bit of head fake. I'm going to be definitely looking to trim up some of our longer bonds, take advantage of the fact that the 10 and 30 year have come down really, really quickly here. And hope for the best. But my expectation is we're going to get a little bit of the Royal Bank of New Zealand from Jay Powell, which is to say that he's going to say, the path is clear. We're going to continue to raise rates. Whether or not that he actually says that or not, I still think it's a good opportunity. We've seen a really big move here to lighten up on some of the longer stuff. And take a little interest rate risk off the table.
Good stuff. We'll wrap it up there, and I will be back tomorrow.